Does it scare you to miss out on something when you had the opportunity to do something but never did it, and now things are not as things could have been because you didn't take action? Or do you feel a bit bad that you did not buy Bitcoin in 2008, 2009, and now look at people who did? And would it be a bit of maybe a good idea to not make that happen again? Just take a chance sometimes on things. And I have another story that I would like to share with you. Chapter 1: The Great Crypto Revolution, a tale of opportunity, timing, and the power of first movers. Imagine for a moment that you are standing at the edge of a vast, uncharted ocean. Around you, there's nothing but open water, untouched, unclaimed. A few individuals far ahead of the crowd see a horizon where others only see waves. They step into the ocean first, catching the earliest, most powerful tides, knowing that the waters ahead will grow deeper, wider, and more crowded. They invest not in the fleeting waves, but in the very future that most of the world hasn't yet realized is coming. This is in many ways what the earliest adopters of cryptocurrency experienced. Cryptocurrencies like Bitcoin and Ethereum have always been heralded as a new frontier. And like any frontier, it wasn't immediately understood by everyone. It was, in fact, shrouded in mystery and doubt, just as the internet was in its early days, or as the industrial age seemed distant and irrelevant to the average person before the revolutions in steam and steel. At the dawn of this digital asset revolution, a few saw what others did not. Crypto, with its promise of decentralization, freedom, and a new way of transacting wealth, was a revolution that hadn't yet fully revealed itself. The first to enter were the pioneers, the ones who took the risk. They were the people who bought coins when the market cap was low, when few people could see the value, and when most of the world thought of crypto as a novelty, or worse, a dangerous speculation. For example, let's say there's a token with a total supply of 100 billion. The earliest investors, seeing something others missed, managed to purchase 2,000 coins. In these early days, the price is low, and the market is in its infancy. Then, as the market begins to notice, institutions, governments, and the media start to wake up to the potential of cryptocurrency. And I tell you, that's happening 2026, 2025. This is actually happening. New waves of capital flood in. People pour billions into the space, and the value of those coins increases exponentially. For the person who bought in first, the outcome is transformative. The earlier they entered, the more they stand to gain as prices soar. It's the nature of the first mover advantage. This isn't just a short-term gain, but a wealth building opportunity that can turn a modest investment into generational riches. The person who bought 2,000 coins at a low price when others were too hesitant will likely see the value of those coins, depending what you are buying, by the way, they multiply as demand increases. The market cap grows, and with it, their stake in this new economy. But what's fascinating about this moment in history is that it's different from anything we've ever seen before. In traditional industries, it was always the powerful few, the institutions, governments, and wealthy elites who got in first. They will see the future of wealth before it was even visible to the masses. Whether it was the gold rush or the birth of the railroad industry, those with influence would enter the market early, amassing resources and wealth that others couldn't access. The power structures were built to control, stockpile, and distribute wealth in ways that perpetuated inequality. Governments and institutions would recognize the future potential of a commodity, secure large amounts of it, and then let the average person buy in. Only once the true value was clear, and by then, the early investors had already amassed the majority of the wealth. That's how it works. This was the story of history. The rich and the powerful getting in first, and the rest of the population left to play catch up. But crypto is different. For the first time in human history, in the thousands of years of our existence, the average person had the opportunity to get in early. Yeah, not just as a spectator, but as a true participant in the creation of wealth. Why? Because in the early days when Bitcoin came out, no one was trusting it. Governments were against it. Banks were banning you from having it and trying to stop you from getting it. Everyone is calling it a scam. Those days were the times when people could get in before the big boys understood what crypto was. Now, the big boys know what crypto is. And people, normal people, are leaving the crypto market. This is a tragedy. This is a tragedy, and this was not the plan. But I digress. But crypto is different. For the first time in human history, the average person had the opportunity to get in early, not just as a spectator, but a true participant in the creation of wealth. The democratization of wealth through decentralized systems is a game changer, and those who could see this coming stand to benefit the most. Think of the rise of the internet. Before it became mainstream, few people could imagine its revolutionary potential. No one knew what the internet was going to be in the year 2000. No one knew it. Well, maybe a few did. Yet, those who saw the possibilities, who understood that this World Wide Web could transform everything, are today some of the wealthiest people on Earth. The same logic applies to crypto. The moment people realized the true potential of the internet, it was already too late for most to get in early. Those who foresaw the future were the ones who thrived. Now in the crypto world, it's happening all over again. But this time, the little guy has a shot. The little guy. I have a shot. And maybe I'm too late now, but I have a shot. The decentralized nature of blockchain allows ordinary individuals to participate in a way that no previous industry ever allowed. Cryptocurrency has broken the mold, allowing those who could read the signs of the future, those who understood the potential of decentralized assets, to enter while it was still in its infancy, before the big players, the big boys, jumped in. They're jumping in now, guys. Now, as institutional investors and governments enter the space, the value of crypto assets is going to be skyrocketing. Those who took the risk, who saw the future and moved early, are now sitting on a gold mine. This story is based a bit in the future, by the way. In a world where wealth and power were once hoarded by a select few, the true beneficiaries of this new age are the ones who believed in the potential of crypto before it was widely recognized. In short, the crypto revolution has given the world a rare opportunity, the chance to break free from the old system, to claim a stake in a new and evolving world of wealth creation. Wealth is going to be created now. It's the modern day equivalent of the industrial revolutions of the past, where the first to invest in the right technologies went on to change the world. Do you want to be a game changer? Do you want to be a world changer? And just as the internet transformed society, crypto is now doing the same. The fortunate ones who got in early, they will not simply be rich, they will be wealthy beyond the imagination of the average person today. Which means I cannot imagine it. Chapter 2, How to Navigate the New System. The Great Crypto Revolution, a tale of opportunity, timing, and the power of the first movers. The Cryptoneer's Guide to Preserving Wealth, a new era of power, control, and opportunity. Right, so as the tides of the cryptocurrency have surged forward, those who saw the potential early, the Cryptoneers, now stand at the forefront of an entirely new world of wealth. With their holdings, these visionaries have unlocked doors to financial freedoms that were once reserved for the most powerful institutions. They've weathered the storm, survived the skepticism, and come out on the other side not only wealthy, but possessing a new kind of power. The ability to shape their financial future without relying on the traditional mechanisms of control. The question now becomes, how does a cryptoneer preserve and grow that wealth? What strategies can they deploy to not just hold, but leverage their crypto holdings without ever needing to sell? In a world where the average person has risen alongside institutions, it's time to explore the systems that can keep them on top of the financial pyramid, playing alongside the powers rather than beneath them. Step 1. The power of holding and lending. The most straightforward and arguably the most powerful strategy a cryptoneer can use to protect and grow their wealth is to hold on to those assets. This is not about selling off a portion when the price rises. It's about playing the long game and preserving ownership. The wealth lies in possession, not liquidation. But simply holding doesn't mean the cryptoneer has to let their wealth stagnate. There are a number of strategies to generate passive income on crypto holdings without ever relinquishing ownership. Lending crypto to banks and institutions. The global financial system has begun to recognize the value of cryptocurrencies. And as a result, institutions, whether they're banks, hedge funds, or exchanges, are becoming more willing to borrow digital assets. A cryptoneer with a significant portfolio of crypto could lend out their coins to these institutions, charging interest on those loans. In this way, the cryptoneer's assets can generate income over time, much like interest-bearing assets in traditional finance. Crypto lending platforms have emerged to facilitate these transactions, offering attractive returns for those willing to lend their crypto. The cryptoneer could choose to lend directly to banks or hedge funds if they have enough clout, or use a peer-to-peer lending platform. The beauty of this strategy is that the cryptoneer can still maintain ownership of those coins, even though they are being used to generate returns. Next, earning interest through staking. Staking is another strategy that allows cryptoneer to keep their crypto while generating a steady stream of income. Staking involves locking up a portion of their holdings in a specific blockchain's ecosystem to support network security and operations. In return, the cryptoneer receives rewards, usually in the form of more coins. This model has been widely adopted by proof-of-stake cryptocurrencies like Ethereum and Cardano. The cryptoneer gets the best of both worlds. Their holdings continue to grow, and they receive rewards without ever having to sell or reduce their exposure to the asset. The rewards can often be reinvested into more staking positions, compounding their wealth even faster. Can you believe this? Then we have the yield farming and liquidity providing. For those who are a bit more hands-on, yield farming and liquidity providing are ways to earn passive income by participating in decentralized finance, the DeFi platforms. By providing liquidity to decentralized exchanges or lending protocols, the cryptoneer can earn rewards, which can be in the form of transaction fees or tokens. These methods don't require the cryptoneer to part with their coins. They simply need to use them in a productive way. These strategies are more speculative, of course, but they can be lucrative if done correctly. The cryptoneer, armed with significant holdings, has the freedom to take calculated risks in DeFi using their fast resources to maximize returns. Step 2. Diversifying crypto holdings. While keeping their assets in cryptocurrency is essential, a cryptoneer would also be wise to diversify their holdings, much like an investor who doesn't put all their money in one stock. A smart cryptoneer will spread their wealth across different types of assets in a digital space. They might have a portion in Bitcoin, which serves as the digital gold, another portion in Ethereum for potential growth, and some in more niche altcoins or stablecoins for stability and liquidity. Diversification offers the cryptoneer protection against volatility, while also positioning them to benefit from different areas of the crypto market. NFTs, real-world assets, and tokenization is the speak of today. Another opportunity is the rise of the non-fungible token NFT and tokenized real-world assets. A cryptoneer could leverage NFTs as an investment vehicle holding digital art, real estate, or rare collectibles that appreciate in value over time. Tokenization allows physical assets like real estate, fine art, or commodities to be represented on the blockchain, offering cryptoneers an opportunity to invest in these areas without the need for traditional intermediaries. For example, the cryptoneer could own fractionalized pieces of real estate, tokens representing valuable artwork or other assets that hold intrinsic value. As these assets appreciate, the cryptoneer can use them as collateral for further loans or as a way to increase their portfolio without having to sell anything. This is the world we are entering. Step 4. Playing alongside institutions. The institution is no longer bigger than the individual now. As the cryptoneer becomes more established and learn how to play the game, they will inevitably have to deal with the increasing presence of institutional players in the crypto space. While this may seem intimidating, there's a distinct advantage to being an early adopter. The cryptoneer has positioned themselves in such a way that they can now play alongside institutions rather than being crushed beneath them. As institutional investors flood the market with billions, the cryptoneer, with their strategic positioning, can move with agility. They can take advantage of new opportunities, provide liquidity to institutions, or lend out their holdings in exchange for high-yield returns. This ability to negotiate with and lend to institutions could give the cryptoneer even more control over their wealth, as they become the ones that larger players turn to for access to liquidity or high-value assets. And yes, let's get back to the CBDC. Step 5, the CBDC and the preemptive advantage. A new challenge lies ahead for all crypto holders. The introduction of central bank digital currencies, the CBDCs. These state-backed government-controlled cryptocurrencies are designed to bring digital currencies into the mainstream. But they also come with inherent risks of centralization, surveillance, and potential for control over individual assets. Dangerous game here. However, the cryptoneer who owns crypto assets before CBDCs becomes widely adopted may hold a significant advantage. CBDCs, while potentially offering new benefits, may also lead to more government control over the economy, allowing authorities to track, tax, and regulate transactions in real time. Those with crypto holdings before CBDCs have the opportunity to exit the traditional financial system if they choose to. They will have the option to hold value outside of government-controlled ecosystems, maintaining their financial independence. The real benefit of owning crypto before CBDCs is that the cryptoneer has more control over how they interact with the financial system. If they decide to keep their wealth in decentralized systems, they may find themselves less subject to the whims of centralized powers. And the conclusion of this story of the future coming, the rise of the cryptoneer. I do admire those who bought Bitcoin many years ago. I admire the crypto people like the XRP army. I admire the Sebek nation that is coming through. These are people that I think will be the new cryptoneers. And in this new era of finance, the cryptoneer is not just a wealthy individual. They are a strategic player in a game where the rules are still being written. We know about this Clarity Act, rules are being written. But the people who are already in the game may be, as they say, grandfathered into the new system. They have the power to preserve, grow, and leverage their wealth using decentralized finance tools, staking, lending, and tokenizing assets. They can play alongside institutions, partnering with them on deals and never once having to sell their assets. They are not just surviving, they are thriving in a world that is rapidly moving towards digitization. And perhaps most importantly, they have opted out of the old financial system, securing their wealth in ways that will be hard for even the most powerful governments and institutions to control. In the grand sweep of history, the cryptoneer is a symbol of a new order, a shift in wealth from the few to the many, from the centralized to the decentralized. And as we watch the world evolve, it becomes clear those who got in early, those who had the foresight, are the ones who will shape the future. Do I want to be a part of this? I do. Thank you for watching.